Ready to dive into the world of investing. Today, we're tackling a question we get asked a lot. How do you actually get started investing when you don't have a lot of money to start with?
Yeah, it's a really common misconception, this idea that investing's only for the wealthy.
Exactly.
And that's something that, we're going to kind of break down today as we go along.
Awesome. So, our source material today is a really great episode from the Margin World podcast.
Hmm.
It's called How to Start Investing with Little Money.
Yeah, I love that
It's a
episode.
good one.
It's super practical.
Yes, very practical. So we're gonna pull out some of those golden nuggets for you today.
Yeah, think of this as your cheat sheet to sort of, confident investing,
I like it.
even if you're starting small.
Perfect.
Right.
Okay, so the Margin World episode, they start by kind of tackling a few common investing myths head on.
Right.
And one of them is this idea that you need a ton of money to get started.
Right.
Or investing is way too complicated, it's not for me.
Yeah.
Have you found that those are things that hold people back from even like dipping their toe in?
Totally. It's like being intimidated to go to the gym.
Right.
Right. Because you think everyone there is already ripped and
Yeah.
and they're speaking a language that you don't understand.
Yes.
But the reality is, like, everyone starts somewhere.
Totally.
And investing is way more accessible than I think a lot of people realize.
So true. So that first one, needing a small fortune to start.
Mm-hmm.
Margin World calls that like outdated thinking, and they highlight this idea, this concept of fractional shares.
Yeah, it's really cool. It's fascinating. So, imagine you want to buy a share of like Tesla,
Okay.
and one share is, hundreds, thousands of dollars, right?
Yeah.
Fractional shares let you invest in companies like that with as little as like $5.
Oh, wow.
So it's a really cool way to sort of like, it's like being able to buy a slice of pizza instead of the whole pie.
Yes.
You know, you can kind of get a taste of the action without having to put down a ton of money.
Without breaking the bank.
And it allows you to diversify your portfolio, even with a smaller budget, which we'll talk about more later on.
Love it. Okay, so myth number 2, that investing is too complicated. I think we've all kind of felt that wave of overwhelm.
Yes.
Looking at like, stock tickers and all those graphs. It's like
Totally.
But Margin World really kind of emphasizes this idea of simplicity, especially for beginners.
Hmm.
And they highlight the strategy of dollar cost averaging,
Right.
which honestly sounds kind of too good to be true. But so break that down. What is dollar cost averaging?
Yeah. So it's really all about consistency and taking the emotion out of investing. So imagine you invest a fixed amount, right? So let's just say like $50, $100. You invest that into the market every single month, regardless of what the market's doing.
Okay.
So some months your money's going to buy you more shares because the price is down, and some months your money's going to buy you less shares because the price is up.
So instead of trying to time the market perfectly, you're kind of you're riding the waves a little bit.
Exactly.
Yeah.
And so what happens is over time, it averages out the cost of your investments,
Okay.
which potentially reduces the impact of market volatility.
Okay, I'm starting to see why this is a good strategy for somebody just starting out.
Exactly. You're not sitting there trying to like guess when to buy, when to sell.
Right.
Especially helpful for folks that are newer to this or maybe prone to a little bit of emotional decision making.
Yeah, for sure. Okay, so we've tackled a couple of those myths, feeling good. But before we jump into specific investments,
Right.
the Margin World episode actually talks about something else that's really important first, and that's building a solid financial foundation.
Yeah, they use this analogy of building a house.
Right.
Like you wouldn't start building a house without a solid foundation.
Right.
So it's kind of the same idea. Yeah.
Makes total sense. So in that vein then, what are some of the building blocks of a strong financial base?
So they break it down into three essential steps.
Okay.
The first one being an emergency fund.
Okay.
Having that,
Because life happens, right?
exactly. Life throws curveballs. You want to have that, 3 to 6 months of living expenses
Yeah.
in an account that you can access very easily, if something happens.
Yeah, nobody wants to have to like sell their investments at a loss because they had like a medical bill or a car repair or something,
Yeah,
right?
exactly. So you want to have that emergency fund so that you
Yeah.
can, weather those financial storms
Yeah.
without derailing your
Yeah.
long-term goals,
Right.
right?
Sure, for sure. Okay, so emergency fund check. What's next?
Next, they talk about tackling high-interest debt,
Ooh.
credit
Yeah.
cards, things like that, yeah.
Those interest rates will get you.
Yeah,
Yeah.
it's, you know,
Yeah.
the host actually makes a really good point. He says that, you know, a lot of times paying off your high-interest debt is actually a smarter financial move than even investing
Okay.
while that debt is still there.
Because that interest you're killing is going to be more than whatever you're potentially making in the market.
Exactly. It's like trying to run up a down escalator.
Yeah, yeah.
It's much easier to make progress once that high-interest debt is out of the picture.
Love it. Okay, so we've got our emergency fund. We're chopping away at our high interest debt. What's that third essential step?
Budgeting.
Budgeting, everyone's favorite topic.
No, I know it doesn't always sound the sexiest, but
Uh-huh.
it's really crucial. And they talk about, thinking of your investments as any other expense. Like,
Okay.
you got a budget for your future self,
But
right?
yeah, like carve out that space in your budget for it,
Exactly,
even
exactly.
if it's a small amount, right?
Yeah,
Just that consistency, I imagine, is gonna be really important, right?
absolutely. And then as your income grows, you can always go back and revisit
And adjust for sure.
and adjust those contributions. Exactly. Yeah.
Okay, so imagine this. You've got your emergency fund. You are paying down that high interest credit card debt. You've made a plan. You're budgeting for investing.
You're feeling good.
Yeah, like now we can get to the exciting part, right?
Right.
Which is, okay, so what are the different ways that we can actually invest?
Exactly.
Where do we even begin?
Yeah. So they start with the stock market,
Okay.
which, for a lot of beginners can feel like this vast, intimidating landscape.
Totally. There's stocks, there's index funds, there's ETFs. Like where do I even
It's a lot,
Right.
right? So yeah, the host does a good job of kind of breaking it down simply. He's like, when you buy a share of an individual company's stock,
Okay.
you are essentially buying a tiny piece of ownership in that company.
Okay, that makes sense.
Yeah.
But what about those other things that you mentioned, like the index funds, the ETFs? What are those all about?
Yeah, so index funds and ETFs or exchange traded funds, those are basically like baskets of stocks.
Yep.
So instead of, buying stock in just one company, you're investing in a collection of stocks, right?
Yeah.
That track a specific like market index, like the S&P 500, for example.
So you're kind of investing in like the overall performance of the market as opposed to just betting it all on one company.
Yeah. Exactly. Yeah, and the cool thing about a lot of these index funds and ETFs is that they have really low expense ratios. So you're not
Oh,
you're
yeah.
not losing a ton of your money in fees either.
That's good. I like that. Now, I remember you had mentioned earlier that even with a smaller budget, there's ways to get started in the stock market.
Right.
Is that where some of those platforms that you had mentioned come in?
Yeah, so Robinhood, Webull, Fidelity, Charles Schwab, all these different platforms
Yeah.
make it incredibly easy to buy these fractional shares of stocks, of EPFs,
Okay.
index funds, you name it.
Very cool. Very cool. Okay, so we've covered the stock market. What's kind of next on our investing adventure?
Let's talk about real estate.
Okay, real estate. Now, again, I'm thinking I need a ton of money to buy a property.
Right, right.
But Margin World talks about REITs,
Yeah.
real estate investment trusts. Tell me more.
So think of REITs as a way to invest in real estate without having to actually, buy a property or manage a property yourself.
So I'm kind of getting the benefit of real estate without having to be a landlord.
Exactly, yeah. So these are companies that own and operate income-producing real estate, you know, so apartment buildings, shopping malls, office spaces, things like that.
Okay, I see. So how do you actually go about like investing in REITs?
So you can buy and sell REITs just like you would individual stocks
Oh, okay.
on major stock exchanges. Yep. Or there are platforms like Fundrise, CrowdStreet that have really made REIT investing much more accessible
Sure.
for people, even with smaller amounts of money to invest.
That's amazing. It's like you're kind of opening up this whole world of possibilities for folks.
Totally.
Who maybe thought, "Oh, real estate's not for me," or whatever it may be.
Yeah. And just like with, any investment, it's
Yeah.
important to do your research.
Oh, for sure.
Understand the potential risks and rewards before you jump in.
Absolutely. Okay, so we've got stocks, we've got real estate,
Hmm?
but the investment journey doesn't stop there.
Right.
Margin World also talks about bonds. which I feel like have a little bit of a reputation maybe for being like a more conservative.
Yeah, a little bit more
Yes.
steady Eddie
Yeah, yeah.
of the investment
Yeah.
world.
So essentially, when you buy a bond,
Yeah,
you are loaning money to like a government or a corporation.
that's right. Yeah. So instead
Yeah.
of owning a piece
Okay.
like you would with a stock,
Got it.
you're giving a loan essentially and expecting interest payments in return.
Okay. Okay. So bonds for stability, stocks for potential growth. It's about finding that balance, I guess.
Totally. And bonds typically, they offer lower returns than stocks,
Okay.
but they can provide more stability, more predictable income, and so that can be,
Yeah.
appealing for
You,
certain investors who,
yeah, depending on your risk tolerance and all that. Yeah, for sure.
exactly.
Okay, so but what about if we want to get a little bit more, I don't know, daring? Margin World also didn't shy away from the elephant in the room, which is cryptocurrency.
It's true. Yeah, that's definitely the most volatile asset class that we're discussing today.
Yeah, and volatility can be exciting, but it also, comes with its risks.
Right.
So what's their take on navigating crypto?
Yeah, so they really emphasize caution,
Okay.
especially for new investors. And they kind of use this analogy of like,
Okay.
you can think of cryptocurrency like a pinch of spice,
Right.
right? Like a small percentage in your portfolio
Okay.
can add a little kick,
Okay.
but you don't want to overdo it.
A sprinkle of crypto just for flavor.
Exactly. So, it's about finding that balance, right?
Mhm.
Between, potentially taking advantage of some high growth opportunities, but
Yeah.
also protecting yourself from major losses.
Right, right. And do they mention any like are there platforms like if people do want to kind of, get their toes wet in the crypto world, are there places they recommend?
Yeah, they mentioned Coinbase, Binance,
Okay.
even Cash App, allows you to buy some crypto these days. So
Wow, okay.
yeah, there's no shortage of options.
That's amazing. That's amazing. But but I'm also thinking like, what if you kind of want a more hands-off approach?
Right.
Like a set it and forget it kind of. And Margin World talks about robo advisors, which sounds
Yeah,
very vague.
futuristic.
Yeah.
Right. It's like having a personalized financial advisor.
Okay.
But instead of, it being a person in a suit, it's a sophisticated algorithm.
Yeah.
So platforms like Betterment, Wealthfront
Okay.
use technology to essentially build and manage a diversified investment portfolio for you.
Okay, so you tell them like your risk tolerance, your goals, and they
Exactly.
kind of take it from there.
Exactly. Takes the guesswork out of it. And the best part is that,
Yeah.
the fees are typically much, much lower than traditional financial advisors.
And
So
that's awesome.
it can be a really attractive option.
Very cool. Okay, so we've covered a lot of ground, right? Stocks, real estate, bonds, even a little bit of crypto,
Yeah.
robo advisors. We did it. But they don't. Margin World doesn't just leave you hanging with like, okay, here's all these options. Good luck.
Well,
They actually offer some advice on how do you actually grow your investments, right? Like that's kind of the whole point.
that's the goal. Yeah.
So what are some of their what's their secret sauce?
You know, I think one of the key takeaways is, again, just this emphasis on consistency.
Okay.
And it really goes back to dollar cost averaging, right?
Yep.
Which we talked about.
Yeah, yeah.
So they really, really hammer home this point that, investing is not about getting rich quick. It's not about timing the market perfectly.
Right.
It's about, slow, steady growth.
It's a marathon, not a sprint, they say.
Exactly.
Yeah.
And dollar cost averaging plays a really key role in that because by investing consistently, whether the market's up or down,
Yeah.
you're essentially taking advantage of those market fluctuations.
Right.
You're buying more shares when the prices are low. You're buying less when the prices are high.
It's like a built-in discount.
Exactly.
I love it.
Yeah.
But it's not completely hands-off, right? Even if you're doing something like a robo advisor.
Right. You don't want to just completely forget about it.
Yeah.
They also emphasize the importance of going back, reviewing your investment
Okay, regularly.
regularly, right? Because
Because your life changes, your goals change.
Exactly. Your
Yeah,
goals change, your risk tolerance may change, your financial situation may change. So
for sure.
you want to make sure that your investments are still aligned
Yeah.
with where you're at.
It's like a living thing. You got to kind of tend to it a little bit.
Exactly, exactly. And then, of course, we can't forget about diversification, right?
That'd be great.
You know, the age-old adage of don't put all your eggs in one basket.
Yeah.
It's really true. And so they talk about, spreading your investments across different asset classes helps you manage your risk, helps create a more resilient portfolio.
Yeah, because if one area takes a hit, then you're not you're not going down with the ship,
Right,
right?
exactly. You've got other things to kind of, balance it out. So
I love it. I love it. Well, this has been amazing. I really I've learned a lot, so thank you. This has been an awesome deep dive into, how to get started with investing when you don't have a lot of money.
my pleasure. Yeah, it's a topic I'm super passionate about, and I think Margin World does a really great job of breaking it down in a way that's really accessible.
Yeah, very actionable. And I think the biggest takeaway for me is that, you don't have to be a Wall Street hotshot to,
Yeah.
to get started, right? Like
Right.
you can begin investing with really, a little bit of money.
Yeah,
And that consistency is really key.
absolutely.
Yeah, amazing. Well, to all of our listeners out there who are feeling inspired, thank you so much for joining us on this deep dive, and keep exploring, keep learning, and most importantly, start investing in your future.
Couldn't have said it better myself.